welcome to this month's episode of Fintech Firebrand. I'm Virginie O'Shea, founder of Firebrand Research, and I'm here to chat to you about this month's FinTech and FinReg news. Now, one of the biggest news items from the FinReg front this month in Europe was the launch of ESMA, the European Securities and Markets Authority's new digital strategy and an update to its existing data strategy. There was a lot of fanfare when this was launched earlier this month. A lot of discussion about what it means. It builds on some of the discussions that have been ongoing over the last 12 months related to how to improve reporting, how to reduce the burden on financial institutions with regards to regulatory reporting, and simplify the lives of a lot of the European regulators out there to make the data that is being reported to them much more harmonized and having to do less reconciliation as a result of that. Now, as part of there are 4 pillars to the new digital strategy. One is something that they're calling digital synergies, which is essentially making sure that when they deploy technology, it's across multiple different regulators. So there'll be centralized harmonized point for data collection. This is an interesting development, could mean big things for existing infrastructure out there. Trade reporting, entities, for example, trade repositories, those kinds of things, and services in that space. There's also a discussion about part of it. There's a digital capability improvement. So having, as I say, a collection point, a data platform that ESMA will be in charge of, that will disseminate information out amongst all the national competent authorities across the EU. So it would be a central point for all of that data collection. Now, if that sounds very familiar, it could remind you a little of the European Single Access Point, which the European regulators have been working on for some time. I think we're 2 years into that programme of work. I think we've got a fair bit to go still, but that is, to remind you, is a single collection point for a lot of data for public dissemination rather than just for regulators. And one of the focus areas for that is environmental, social and governance data. So definitely that is part of this wider strategy. That's part of the update to the data strategy that I mentioned. Another pillar for the digital strategy is related to operational efficiency. Now, that's been a common theme for the industry and regulators. But it's certainly looking at basically making sure that each deployment part of, a cloud-based technology solution is what they're going to go for, some sort of SaaS, software as a service, and they want to make sure that it's as efficient and as cost-effective as possible. So certainly they will be looking at the providers out there, and no doubt they will be looking for an EU focused vendor, largely because they would like it within their regulatory jurisdiction, if at all possible. This might not be particularly feasible when it comes to the topic of cloud provider themselves, but or cloud services provider or CSP, but it could be for the actual SaaS provider. So they would be EU located, perhaps, or headquartered. Another key aspect, and the final key aspect or pillar of the digital strategy, is relating to a future-ready and secure ecosystem, as they call it. Now, this is in keeping with the Digital Operational Resilience Act that we've seen rolled out last year, looking at the cybersecurity, operational risk mitigation, all of these things, planning for any downtime, having backups, making sure that everything is as secure as possible, even in light of looking at things like quantum as well, quantum computing's impact. So certainly, definitely a very forward-looking aspect of the new strategy, and definitely something to watch this year. They're going to be making ESMA is going to be making key decisions in cooperation with, obviously, the European Commission and other EU-level regulatory bodies. It will be making those decisions throughout the course of this year, hopefully rolling out some things in 2027. And the final stage will be 2028, when it hopes to have the first tranche of its initiatives related to transaction reporting, harmonization, and the centralized point there, having that fully realized by 2028. Now it's the World Economic Forum in Davos this month as well, so we can expect a lot of buzz around many tech topics. I think last year we had the full buzzword bingo set, and I expect that will be much the same this year, ticking off topics related to tokenization, distributed ledger technology, AI, no doubt, and possibly also quantum computing, though that has been a little bit quieter overall over previous years. But on the AI topic, we've seen some interesting developments this month. JP Morgan Asset Management announced that it will be moving away from using proxy advisors to using AI instead. So, and that's for, if you look at the world of wonderful world of corporate governance, proxy advice is related to asset managers having to provide investors with proxy voting services for various voting for their shares. And the different votes you may have related to an AGM or beyond as well, with regards to corporate governance. So proxy advisors have long been in the market providing advice to help those asset managers make the right decisions for shareholders, largely en masse, because obviously we're looking at retail shareholders as well as institutional shareholders, and having that advice has usually been very important. We have two very large providers, US headquartered, that have been providing proxy advice for a long period of time, ISS and Glass Lewis, the two largest ones in that market. So the US has been a little less favourable towards proxy advisors over the last 12 months due to the changeover in US administration, although they have been under review for quite a period of time before that. There is a move away, recommendations away from using proxy advice, because there is a sentiment that they may be voting based on bias. Now, while that may be a valid point to keep in mind, certainly the extent of that influence is interesting to see, and the politicization of the topic, especially when it comes to voting related to topics related to ESG, dare I say. So it's interesting to see such a large bank-owned asset manager opting for AI in this space. We also saw this month a speech by one of the SEC leads about the possibility of using AI in this space in a very positive light. So it's interesting to see that the SEC Division of Investment Management Director Brian Daly gave a speech this month to the New York City Bar Association on that topic, and suggested that AI was a solution to not having to rely on proxy advisors. Whether that is the case or not, there will have to be a lot of work put into making the AI usable enough in this context, because, as I say, there could be a very high volume of events going on that need to be voted on, or topics that need to be voted on. So certainly that is a very big pressure point. It's a scalability challenge. And if you're using AI, you will also have to have the training of models, and the data to feed into them needs to be cleansed and fit for purpose. So certainly that probably will take a large chunk of change to sort out, no doubt. So it will not be a cheap initiative, and it will be interesting to see how many other asset managers may move down that route in the future, particularly those that are US headquartered that are coming under pressure in this particular area. In Asia, we've also seen the Hong Kong Monetary Authority issuing quite a few different interesting initiatives this year. We've seen its best practices on cloud adoption, relating to governance of cloud, dealing with incident management, looking at risk assessment and due diligence that you need to do on those cloud providers, and having to look at resilience as well. So very important things that bring it into line with a lot of international standards in this particular area. So that was an interesting development. HKMA also came out with what it's calling its DART strategy, which is related to updating its data and payments infrastructure across the region or the market. And that's looking at bolstering data infrastructure and making sure that everything is linked up cross-border. So there's definitely going to be a lot of investment with regards to data as well. They will be using AI. So the A bit of DART relates to AI, unsurprisingly. And the R relates to quantum resilience, which is interesting because that's an embedded part of that new strategy as well. So interesting things to see in Hong Kong too. An interesting one for those in funds marketing. ESMA also put out this month some best practices with regards to sustainability, ESG integration and exclusion strategies, marketing. So they put out a thematic note on that topic this month. Obviously, it's very difficult to deal with these things internationally because there's a wide spectrum of different opinions on ESG at the moment. But in Europe, certainly it is a focus point. And the four principles are accuracy, accessibility, substantiation, and being up to date. So very basic things there to think about, but certainly very important going forward. Now, for my final thoughts for the month, another big topic has been looking at the central bank furore with the Fed against the US administration at the moment. There's been a lot of discussion about the role of central banking. Now, as we move to possibly more of a stablecoin environment where we don't have central bank currencies or CBDCs or central bank digital currencies, I should say, in place in a major market like the US, currency control becomes a slightly trickier topic because you will be reliant on obviously commercial providers potentially with regards to stablecoins, and they will be in charge of those. And if you're pegging to those, it would be particularly challenging. Although obviously, if you're pegging to the US dollar and it's still being maintained and monitored by the central bank, that is one aspect. It may not always be pegged to a currency of that sort. However, so it's interesting to see as we see the tokenization topic take off further in this particular market, the topic of financial stability becomes even more important. Stablecoins, despite their name, have been less than stable in the major ones. They have depegged relatively regularly from the US dollar. So certainly it's a risk management bit of a nightmare, but potentially for those in the stablecoin space. But we're going to see many more of them coming into the market in the next 12 months. So what do we do about that? Also, the importance of having an independent central bank has always been a sort of tenet of the financial markets. It's why a lot of financial markets, when they see anyone that's interfering with a central bank, tend to rush to away from that currency and towards things like gold and silver that retain their value during in unstable markets. We've also seen, a lot of changes, I guess, across the regulatory sphere in the US. So there's a lot of change to monitor and watch from an international standpoint. It will be interesting to see what happens this year when the current Fed chair exits the role potentially, and at what point that happens. It will be interesting to see depending on the Department of Justice investigation that he is now having to face. What does that mean for the market? Well, we can expect a lot of uncertainty, possibly instability in the market, and a maybe wavering dollar as we see all of these things called into question and international standing potentially changes. But that's obviously one of the many different aspects we've seen over the last 12 months with regards to the financial markets. So nothing new, I guess, in terms of the roller coaster that we're on. Just definitely interesting to see how these discussions progress as we look at CBDC versus stablecoin globally.